Good morning, everyone. I hope that you're all doing well. I need to remember to turn this on actually before I forget. There we go. Right. So this is this morning's trade of my GU long, which I closed 5 hour partial and the remainder closed at break even. So this is a very simple setup. So as you guys know, that my session time is from 7 to 9. So just before 7, I was just looking at the chart. So I stick to the obviously my base time frames is from the 15 second to the 1 minute, and then obviously my entry time frame is from 1 second and higher. Generally tends to be 15 second and 1 second as my two time frames that I prefer to use. But obviously, just because I use that, it doesn't mean that you have to. It has to be because you are comfortable trading it. I'm very comfortable trading 15 second and 1 second. It's something that I've tested myself, and it's something that I've built the data on to get that confidence and comfortability to do that. But however, if you aren't comfortable doing that, you need to find the combination and the time frames that you are happy to use. Don't simply make those decisions based on what I do. Regardless of, obviously, if you're trying to trade this model, it should be based on your own experiences and should be based on what you are happy to do. Because it's not going to give you the same results if you are trying to do something that you aren't comfortable with. However, if you want to build that comfortability with it, you need to test it yourself fully until you gain that. It will take some time to adjust to the seconds time frame. Not only that, it will take you some time to adjust to using a different model if you were using the Inception or even James's model prior to testing this. So just looking at the charts, there's nothing really important in terms of, there's no real disruption prior to it, so there's nothing for me to take immediately. I did have a glance at the M1 just before it, but there wasn't anything. We were in this huge range from here to here. Where was it? Yeah, here to here. So there wasn't anything at this time when I started looking. So going back to the 15 second, let's go back to here. I mean, this is a pretty textbook setup. There's not much for me to say on this one, to be honest. Let's go to here. Okay, so following on from structure from 7, I'll just mark it out for you so we know. So we have this new range forming. Oops, we got this new range forming from here, and then we have a new one. At this point, there was no disruption, break structure, which carried on to here, and this low. Once this low was created, we're obviously in this range, and then what happened was we had a break of this low, of the previous low, which was here, from this high. This is why you need to make sure your structure is always correct, purely because this could easily be missed. People can either mark this as the high or this as the high, or even this one. Well, that is that meets the rules anyway. But in terms of, people can mark this as a high, this, whatever. The fact is, the high was here, and this can easily be missed. So make sure your structure is correct. And this is in terms of seconds time frame. Sometimes because you're trying to trade live, and if you aren't confident, you will have that clouded judgment of whether your structure is correct or not. You have to be able to restructure on the seconds time frame before even thinking about trying to trade. So here what we have is, obviously we have intent followed by intent. This, oops, turns in, sorry, I pressed the space bar, apologies. Go back to where I was. Okay. So what was I saying? Oh yeah, so what we have here is bearish intent followed by bullish intent. That gives us a successful disruption. Essentially, is intent followed by intent. So all we had to wait for was price to come back to the POI, which it did, and then I went straight to the 1 second from here. So what we had was, once price tapped in, we had this low, which was from this high. Then we had this low from this high, which was eventually taken. But obviously, we're not going to enter on this first break because we don't have any disruption going on at this point. So if I carry on playing price, so then obviously a new low was created. Now again, this did wick out a little bit. However, at this point by now, you should know that I do still trade. If price does wick out a little bit, I still take it. It's only the ones that fully crash through, because if it's going to crash, it's just going to go. It's not going to respect it. However, if I see it bouncing back, I still take the risk. However, by doing so, it is lower probability to an extent. So just make sure that if you do adopt this way of trading, and if you do adopt this adaptation, just understand that you're taking that higher risk level trade basically. But anyway, because this was now a valid, well, it's not yet actually. Hold on. Yeah, sorry. Because now this low was taken out, this trade would be a valid disruption for it to come back and continue. So for me, I was ready to take the trade whenever it broke that range. If it broke that range, because what happens is if this was to go on to create a new low, obviously this would take out further. But if it was a snap back, then it'd be the new range that's formed there as the entry point to go on from there. So anyway, as we continue, price eventually smashes through. As soon as I got through, I think I made a point that I switched over to MT4 again just so I can use a new trade manager. It was perfect. I literally just had to click and I was in the trade. It's Ment FX's manager that he kindly sent me, to be fair, to try. It worked perfectly. He made some new adaptations to it, but obviously it's up to you whether you want to try it or not. I'm not exactly affiliated with it, so whatever you want to do is up to you. Anyway, I entered this trade just by a click. It was entry off the breakout, and then the range was obviously from here to here. So that's now a successful disruption, which made sense because either way I would have waited for the price to come back to this range for it to come back before continuing. And then that's like the other, obviously that's without the entry adaptation. I don't know if it does come back actually. I don't remember it does. No, it doesn't. It just carries on going. But so price continued, and obviously my first partial is about 10 pips. But the thing to remember, and what I remember seeing from the end of last year, but I didn't have any breakdowns to even discuss this one, is that, for example, this trade was taken on the 15-second time frame, right? And we had this high. This high is the minimum target, and that was obviously the long-term hit for this move. Because it's the 15-second time frame, this move is not, I mean, what was that? How many pips was that move? I mean, there's only 7.4 pips. With a 1 pip stop, that's only 7R. Now, I say only 7R, but that's what majority of you see it as. However, 7R, that is the minimum target. Because some of you don't move your stop loss to break even, hold on a sec, so let this play out. I'll just do it this way quicker. Okay, because some of you aren't moving your stop loss to break even because you want the higher risk to reward, you're either taking a loss or just taking the break even without taking any profit in this whole move at all. However, what you need to remember is that, let me get rid of this and this. What you need to remember is that this is, this is the minimum target that you should be aiming for. If price actually hits that, that is now a winning trade. Regardless of whether the fact that this goes to break even or whether it hits your stop loss because you haven't moved it, just because you're taking a loss or break even doesn't mean the trade is lost or that the model is not winning. It's just the fact that you've hit your minimum target, but you're not happy with the risk to reward, which is fine. It's completely normal. But especially when you're journaling, you need to make sure that you're acknowledging that, because a lot of you can easily type in break even, loss, break even, because of these mistakes, and you're not acknowledging what the minimum target is, right? So just bear that in mind. Anyway, what I was looking at for this one, so I looked at the M1. There wasn't really anything special. That's why I drew the line, because of the M1 range of that high. But if price was to continue after my partial, I did aim to try and go for that daily POI as the longer term swing. But I didn't expect it to go all the way, to be honest, purely because we have just broken this structural high from this low, as you can see from here. So that's the higher, so I expect some sort of retrace into this POI here to continue higher. So I wasn't too pushed, as in I didn't expect it to go all the way on this move alone. It was sort of in the middle of that higher time frame move. But in terms of lower time frame and the session trade, I mean, I started my session at 7 o'clock. Trade was taken in 17 minutes, and my partial was taken in 3 minutes. So basically 20 minutes of work for 5R. I'm not going to complain. As soon as basically what happened, I put the partial point there, and then I left the chart completely. I was gone. It was automatically set to BE, and price came back to take me out at break even, and I was fine. I didn't proceed to continue to trade the session because I didn't need to. purely because that's just where my plan is. I don't tend to try and push for any more trades at that point, so I was happy with that. But in terms of disruption, just to give you a short run through, actually I'm not going to put the candles on now so you can see it side by side. So essentially what's happened, and this is the model step by step. So what we had was we had a range which was eventually taken out by intent, followed by intent. Price eventually came back here. Okay, let me draw this on there, and now this, well, I'll just use, there we go. So we had intent followed by intent, which then gave a POI for us to go long. And then what happened inside here was that we had a disruption, and then we entered off the breakout, and price continued to take out that high. So it was somewhere here. Okay, so what happened here was we had the first bullish break, but then that was taken out, and then we continued to follow trading that disruption, and the entry was taken via the breakout of the range. If you still don't understand why that is the case, go on the FAQ section. There is a video called entry adaptation that will tell you the different adaptations you can make to your entry system. And for me, if I stuck to the old refined entry system, I would have missed so many trades, and I would have even missed this one. So for me, I'm still going to carry on with that. I think it's the best way for me to enter. It's really easy as well, takes away the stress as well, and that not necessarily stress, how would I say it, that sort of impatience, I would say, because you're already in the move. Then you don't need to start sweating about whether the price returns back to your POI or not. You're just simply entering off that breakout of the range, as you would expect anyway. But anyway, that's basically the whole model step by step. So essentially it is waiting for that first disruption to happen, which is intent followed by intent, and doing the exact same thing on that lower time frame. And then you need to decide what entry adaptation you're going to take in order to actually enter the trade itself. And again, to reiterate in terms of the time frames, obviously I use the 15 second and the 1 second. What you'll notice is that's what I majority use anyway. Purely that's my comfort, and I'm confident using that. So just bear in mind that when you do start testing it, especially when you start testing it, make sure you've tested different time frames that you are happy to use, just so you know that you are comfortable doing it. Don't necessarily just jump to the 15 and 1 second if you aren't comfortable marking structure for one on the seconds time frame, and even trading on the seconds time frame, because it's not as easy as it seems. Obviously it seems easy for me to show you now, but it's not as easy as I've made out, I suppose, purely because the reason why it seems easy for me is purely because I've got that chart time and experience. I mean, 7-8 years is a long time, but if you're new to seconds, or if you aren't comfortable with marking structure in the seconds, don't trade the seconds just yet. Just make sure you're following the blueprint the roadmap even I've posted in in the prerequisite, if you're still in that phase. But obviously, whatever you decide to do is all up to you, but just be accountable for everything that you do. I hope this breakdown was useful. Obviously, this is the first trade of the year, so I'm grateful that it's worked out. It's quite nice trading GU. I mean, it's as volatile as I expected. Trade happens quite quickly. I didn't really check EU. I don't think I need to anyway. But I'm going to stick to GU for a little while. A spread was okay, but obviously this was a buy, so I need to see what a sell was like. The trade manager also factors in spread as well, so it's not too bad. I don't necessarily need to worry. I just continue trading as I normally do. But apart from that, there's nothing more I need to say. I hope you all have a great trading week. Hopefully we'll see more trades over the next few days, and I'll post a weekly outlook at some point either today or later this week. But for now, trade safe and stick to the rules.